Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. As always, we start with a bit of news and we got our first bit of information for the Viridian expansion that should be coming next month. So not a lot of time for testing, but the first bit of information from my perspective, pretty damn cool. Graphical updates. The two that I like the most are, first of all, of course, the new missile impacts that will basically have a different effect, a recognizable effect depending on the damage type of the missile. Looks very cool and very promising. Definitely gonna load up my Hela with all the different missiles and then take a look at the effect. I think it'll just give you all of that immediate feedback on what the enemy is shooting at you, what you're doing to the enemy. Definitely seems very promising. And then the other one are like the new cloud effects for within areas where you can play. Volumetric clouds, I believe it is called. That looks pretty cool as well. I hope that that they can put those to good use among some of the sites that I regularly take a look at, especially some of the exploration sites, but also perhaps around asteroid belts. It just could be very cool. It looks very immersive, if of course what the trailer shows is what we'll get, because those might just be cherry-picked angles, but we'll see how that feels and how that looks. So pretty promising graphical updates already for the expansion. Definitely something to look forward to and a good reason to get out of the station and fly out there. So next up, we'll take a quick look at the New Eden store as well, see what's happening at the moment. Let's go. We've got no sales to report. We do have special 20-year bundles, Legacy Apparel, Legacy Industrialist bundle, Standard bundle and an Advanced bundle. Interesting, about 1,000 plex for those. Might want to take a look at what's, for instance, in an Industrialist bundle, probably like skins and things. Let's see. Yeah, couple of skins for, well, quite a few skins for industry related chips. So stuff like that's available now. That's pretty interesting. And then we get our services, nothing on sale or anything like that. So we get to dive straight into the market. Let's go. And as always, we'll start with the pilot services coming in at 235. There we go. Let's start, of course, with Plex. You may already have seen that on the ticker. Little bit of a pullback for the week, but definitely feels like it's basically pretty flat. The market is still waiting to see what's going to happen next. At the tail end, though, we are starting to go back up. So a little bit of variation here. Clearly an increased volume that increased the price due to the sale that was available, Omega Time sale here in the New Eden store. So after that, we pull back a little bit and we start to flatten out already. So the current price for Plex seems to be what the market's happy with, around 4.7 million for the sellers in Jeddah, and a little bit of competition this week in the Perimeter Tranquility Trading Tower. And then we've got 4.5 million for the buyers, so still a pretty narrow spread for all of these services. That's at least what I'm expecting. I think the market is still waiting and seeing. Graphical updates are nice. Gameplay updates would be very nice as well for the expansion. Next up, the multiple pilot train certificates starting to find itself a bit of a range here as well. Volumes, of course, are completely abysmal, but 2.1 million for the first seller, actually selling 4 billion, excuse me, of course, selling 4 of them, and then 1.7 billion for the buyers. That's actually starting to be a little bit of a spread here, but of course, when you can trade like a few every few days, that is no longer all that important. Then the impact, actually I'm gonna remove them right here right now, because I think we'll just the way it's gonna play out is that we're just gonna keep getting a nice spread between the daily averages. I'm expecting this to start to move sideways mostly, but it could actually violently swing when a couple of sales happen. It's really not that indicative of the general economy anymore. So let's just remove this one. 20 years of EVE Online and the multiple pilot train certificate leaves the queue here of the pilot services tab for EVE Talk. Let's get moving next on the skill extractor. that had a reverse impact from a sale a little bit before the plex sale. So we got the volumes here with increased price, and then the skill extractors got the volumes a little bit before that with downward pressure on the price. That means that the sale was happening on the EVE Online website. You could basically get more skill extractors for less money, and as a result you got more supply, lower prices. All of that has been absorbed as well, and we're settling just above the 500 million mark, 514 for the sellers, 492 million for the buyers. So again, decently narrow spread, around 5% or so, probably even a little bit less than that. Still quite expensive, but we've been in a worse spot for the skill extractors. So plex going up a little bit, but starting to move sideways. Same thing with the extractors. What's the market looking like for the injectors next? Here are the large scale injectors, definitely starting to move sideways as well at a very high price point on the 1 year chart. 950 million for the sellers, 920 for the buyers. Again, really narrow spread. And then we've got the small scale injectors that are doing the same thing. In fact, the entire, as up until this point, the entire pilot services market seems to be in that wait and see pattern to see what the Viridian expansion actually means. Then we got the daily alpha injectors. This was practically unavoidable as we are starting to edge up towards that 50 million mark decently quickly. Very nice. The pattern is still just visible on the 1 year chart. Next week will be a little bit different, but we have to try to remember this, right? We touched 50 million. CCP comes in with a sale, huge volumes, bring the price down below 40 million. Then we had the actual price change that really started to show itself through the alpha injector market as well, after chewing through all the old reserves, pushing us to 70 million. Eventually CCP came in as well, managed to bring the price back down to almost 40 million, but a couple months later substantially above 50 million for a couple of weeks. Another CCP intervention down to 40 million, but then just 1.5 months, 2 months later, we're back well above 50 million. CCP comes in again. So this time we are already just about a month after the sale back at the 50 million mark. It's going to be interesting to see. I think this trajectory is pretty much unstoppable, but of course, in my opinion, on this one I would be a little bit careful, because CCP is often known to try and surprise us as well. So if you would follow this pattern, you would basically expect us to shoot up above the 50 million mark in the next few weeks, and then for CCP to intervene very quickly. But they might not do that. They might actually do another pump up until a very high price before coming in. So it's going to be interesting to see what happens. It could go either way. Don't sell too soon is basically my message here. I think I think you can still buy at this point. Let's take a quick look at the market data itself. 50 million for the sellers, below 46 million for the buyers. I think if you want to ride this wave, you can still try to set up a buy order. They are of course becoming more and more tricky to trigger. So I would say try to grab it below 50 million. And then bank on CCP not coming in too quickly, so you can have a nice profit margin. That is definitely a possibility. I don't think CCP wants to come in with another intervention on the daily alpha injector, let's say somewhere next month already. So we'll see what happens, but it's definitely an interesting pattern that potentially gives you a predictable trade here. But CCP is anything but predictable, of course. Next we have the hypercores that are also starting to move sideways here at around the 500,000 disc mark. 495 for the sellers, 458 for the buyers. Same story, the market is waiting to see what comes next for the game. Then we have the mineral market coming in at 845. There we go. As always, we start with titanium. Pretty good news for the sellers here, and yes, of course, buyers want to get minerals as cheaply as possible. Miners, which is mostly what I do when it comes to my main activities, exploration and mining. Above 4 ISK is pretty good news. So a little bit of pressure already showing up here, but titanium still selling at, let's go for the price, of course, 407. 398 for the buyers. They're just below the 4 ISK mark, so demand is here, and titanium can maintain a price of around 4 ISK. I would say if the sell price dives below that, I'd hold off on selling at this point. Maybe a 50-50, maybe sell everything, considering we've had a couple of rough weeks here in the titanium market, but definitely nice to see 4 ISK on titanium for the sellers. Then we've got pyrite. That is very interesting. Definitely a bit of a move. The highest price for about a month here for pyrite, selling at the moment at 11.10. Buyers forced up to 10.39. Still a really narrow spread, showing a little bit more demand or a little bit less supply, of course. I have to be honest, here in Belgium, the weather is finally starting to turn. 20 plus degrees Celsius and lots of sunshine. That definitely is not good for the gameplay time. So perhaps a little bit of less supply might be part of the cause here as well. Let's see if that's true, because then Mexelon should start to do something else as well. And well, it's stopping its descent. It's not going straight through the 50 ISK mark. 51 for the sellers, 48 for the buyers. They're still trying to get Mexelon below that 50, but for now it's actually holding on quite nicely. So interesting, is this a reversal due to demand? Is it due to supply? Well, we are going to get into summertime, which is generally a slump. Historically, from my perspective, especially for Isaac Minerals, we always had pretty nice volumes of supply that still came in, and so generally the summer has not been a great time to be mining and to be selling, but rather to be stockpiling. And so that may be the reason why we are pretty low at the moment as well. But we're stopping this descent right now, so maybe something else is brewing. Definitely pretty interesting. Could be some position taking from marketers as well, right? People that want to trade this stuff are spotting basically for Mexelon lowest price point for the year. Titanium, not exactly, but anything below 4 ISK makes sense to pick up. And then pyrite actually doing a little bit of reversal after we touched the 10 ISK here on the daily average. So again, it might be some investment money as well. For low sec, we've got Isogen that is back on the upswing. That's definitely pretty interesting, trying to get to a 625. 613 for the sellers, 603 for the buyers, so buyers forced up above 600 ISK as well. Very, very interesting. A uniform move here between high sec and low sec minerals for the first time in quite a while, I would say. Mostly Isogen has been very flat while we've seen pressure in high sec minerals. Let's see what Noxium is doing. Also a sharp move up here all of a sudden, getting sellers to 1000 ISK for most of them, 944 for the buyers. Very, very unusual. This could again be a sign that like some investors are coming in across the mineral market and taking a look at it and trying to get ready. Or there could be, for some reason, perhaps something happening in nullsec, some real demand jumps and players expecting higher prices for minerals to be on the radar. So we'll see, of course. Let's take a look at nullsec. Here is the Zydrine market. Very bad chart due to some data points, but alright, on the last week, basically back up a little bit. Not the highest price point of the year, but definitely pretty expensive. 2,350 to 2,164. That's an okay spread actually between sellers and buyers, especially for something coming almost exclusively from nullsec. And then we have Megasite that was at a 1-year high point, is still pretty close to that price range, but has to give back a little bit of ground. 3,527 for the sellers, 3,1 for the buyers. Definitely a bit of spread opening up here as well. Can the buyers make a difference here by trying to bring the price back down? Perhaps they can, but I think overall it's more sellers that will still dictate the price here. So I think a little bit more competition might be coming in to try and get rid of some Megasite. It's pretty obvious on the volumes here that these very high prices are having an impact on the sale volumes. And then we've got Morphite finally, that is still well below 40,000. This is definitely a different vibe to this one. 39,000 to 37, almost 38,000 for the buyers actually, so pretty narrow spread, but clearly moving below average in the last couple of weeks. Next up we have the PI market coming in at 14 minutes. There we go. Let's take a look at this one. A few signs of increased demand in the mineral market. Let's see what the PI tells us then. Could be something tied to capital ships, of course. Here are the broadcast nodes. Definitely slightly up for the week and basically back at the highest range above 2.5 million. Almost 2.6 for the sellers, almost 2.5 for the buyers. Really narrow spread. So again, big volumes here, pushing the price up, showing pretty strong demand. Construction blocks wise, at the 1-year high point last week. week, and is continuing to build as well. Almost 13,000 now for the sellers and well above 12,000 for the buyers. Quite a significant push up. And so construction blocks, pretty easy, pretty common, and yet 1 year high point just in the last couple of weeks. Coolants had a 1 year high point to 15,000 this last week. Gives back a little bit of ground on that, but let's see where the sellers are at. 15.2 to 14,000, just a bit of spread opening up, but of course this is a lot of increased prices, a very violent swing up here for coolants. That's a little bit too much for the market to bear in one go. You can also see the impact on the volumes here, but even if we lose, if we go back to 12,500, which is entirely possible, we're still very expensive on the 1 year chart. Volumes can recuperate there, so super expensive, showing pretty damn strong demand, but the lower volumes here are a bit worrying in my book. Then we get enriched uranium, very same story. 10 days ago, 1 year high point, gives back a little bit of ground, but is, I think, starting to settle already. 17,500 to 15,000, very expensive. Volumes here holding on a little bit better. But definitely super expensive. Integrity response drones back above the 325 on the chart as well. 3.3 million for the sellers, almost 3.3 million for the buyers as well. I definitely think this is another sign that, while last week or 2 weeks ago looks like we had a little bit of a breather in demand, right, a little bit of a pause in the demand for some of these advanced PI materials. Just any pullback in the price brings the buyers roaring back. I think the competition to get as many capital ships as possible in Nalsik is still really ongoing, and so this is the result. Super expensive integrity response drones yet again. Mechanical parts holding on to a very nice price as well. 14,350 for the sellers. That's super expensive. Then we've got miniature electronics still staying above 17,500 at almost 20,000 for the sellers, 18,000 for the buyers. So again, in the most expensive range for the year. And then this is going to be a little bit interesting. Nano factories, all right, still slowly edging down here, so we're not seeing too much of a rush. But look at the volumes though, they are definitely up as well. Lots of advantage taking from these slightly lower prices. It's just that there's probably enough supply to keep us in check here. 1.35 to 1.25 million, still on the 1 year chart, quite expensive. Organic motor applicators had a 1 year high point 2 weeks ago, loses a little bit of ground on that, but still very expensive at almost 1.4 million for the sellers. Recursive computing module then, well, still has that new use, so it's not a surprise that this one is in its new range, above 2 million, 2.3 to 2.49 million. Very narrow spread there. Robotics, 1 year high point right now. That's pretty damn crazy. 117,000 for most sellers, above 110 for the buyers. So again, very expensive, showing that PI demand is actually still here, still very strong. Rocket fuel, right, was an indication about a month ago that maybe there's a bit of exhaustion in the market as it touched 12,500, and yet here we are back at 15,000 on the chart. Sellers for 14.8 at the moment, 14,000 for the buyers. So very expensive yet again. Self-harmonizing power cores able to stay above 2.5, yeah, well above 2.5 for the sellers. It's also very expensive. Look at the volumes as well, so any dip gets bought very quickly. There's definitely a lot of demand still in the market. Smart fab units, as we mentioned, irregular volumes has that potential for lower prices but also for more volatility, so end up to 180,000 at the start of the month. Loses a little bit of ground on that and actually goes back down very quickly below 100k, 92,000 to 60,000. That's a 50% spread compared to the buyers, 30% compared to the sellers. That's a pretty damn large spread. So this is definitely one of those things that we have to keep in mind when it comes to trading, and when we look at PI, this is an item that has very irregular volumes, and that brings that trade potential due to volatility. If you can grab some of these at 60-65,000, and then you get a sell opportunity 150,000 or something like that, which is pretty crazy, but I think above 100k is definitely possible. Those are pretty damn nice numbers. Then we've got sterile conduits that are back above 1.25 million. So once we go below that, you can clearly see some buying coming in, and anything that's cheap enough gets picked up quickly. 1.3 million for the sellers here. Supercomputers staying at around 150,000. Yep, 145 for one seller, but still, of course, very expensive. Synthetic oil then, not the best price of the year, but another one of those that about a month ago said, yeah, look at that, back at 10k. Is the market getting exhausted? But no, slowly we are pushing back up. 12,400 now for the seller. So again, back in the expensive range. Synthetic synapses still above 130. There's really, I mean, this is just a story for PI this week. Yet again, even water-cooled CPU. Look at the volume starting to come down due to the high prices. And yet sellers are at almost 13,000 disk. Buyers at 10k. This is the same story as with the smart fab units. You have less regular volumes on this one, so you have that potential for more volatility, but it does feel like volumes in the last couple of months have been very strong, so I'm not sure if a huge pullback is possible for water-cooled CPU anymore. And then finally, we get to it where mainframes easily above 2.5 million. You can even see over the last 10 days how the minimum prices have gone up, showing increased demand. 2.68 million to 2.61 million. That's about as narrow a spread as it gets for something this expensive. So the PI market basically back this week, showing that demand is still very strong. And this on a week where minerals are showing sort of the same thing. So definitely, in my opinion, a bit of a sign that demand for capital ships is basically back after, well, might have looked like a pause, but perhaps it wasn't. So pretty interesting. Next we have the advanced moon materials. That's coming in at 21.35. There we go. Let's take a look at these crystalline carbonites, actually able to maintain the gains pretty much from last week. So I'd say pretty expensive now at 170 for the sellers. Look at that as well, 168.50 to 168.30. Super narrow spread again. A lot of these items, to my surprise, have very, very narrow spreads, which does show that the market is like really on edge, I feel. So there's desperation to grab the stuff, but there's plenty of supply, I think, to sell stuff as well. So it's pretty interesting to see such narrow spread here in most of the market. I used to see much bigger spreads across the board. Then we have Caldari, which is titanium carbide. That's also pretty expensive at around the 175 mark. So 178 to 167, a little bit better in the spread here between sellers and buyers, but of course at the highest range of the year. For Minmatar, it's Fernite carbide. That is still pretty inexpensive compared to the others. 115 to 107, has a bit of spread, clearly has less demand as well, looking at the buyers down here. And then for Amar with tungsten carbide, we are still above 175 as well, so pretty interesting dynamic this week. We've got Caldari, Galente and Amar coming together at a price around 175, and then Minmatar clearly lagging behind here. 183 to 178, narrow spread, very expensive price, in fact the most expensive seller on the list here. Impact on the metamaterials for Galente, it's photonic metamaterials, also up clearly in the last month or so. We've started to see upwards pressure for the advanced moon materials. To me, coming as a bit of a surprise considering the pressure on the morphite price, which is also tied to the Tech 2 economy. You'd think lower demand perhaps could have an impact on the morphite prices, but here clearly we are back up in price substantially. 12,340 for the first seller, 12,250, so again really narrow spread on this upwards move, showing that it is, in my opinion, quite demand driven. For Caldari, it's non-linear metamaterials. This one is starting to come back down. but is still decently expensive on the 1 year chart. I think 15,000 to 14,290, so losing a bit of ground after of course peaking to 20k on a couple of days. So this is perhaps not that abnormal. Actually gonna quickly check back. So this one is getting to 12.5, so this is still quite a bit more expensive. Then we've got Minmatar with plasmonic metamaterials still clearly lagging behind here, 11,250 to 11,000 disc. And then for Amar, we got terahertz metamaterial that is most expensive again, 17.2 to 15,500, bit more spread on this one. So very interesting story, I would say, this week. Clearly we got defined differences between the different factions and their advanced moon materials. At the moment it is Amar that's the most expensive, followed by Caldari, then Galente, and then Minmatar is lagging behind by quite a bit compared to all of the others. Let's take a look at the other advanced moon materials to get a feel for the general trend. I think it's gonna start to be sideways here. Fermionic condensates clearly moving pretty much sideways on the chart. Actually, Ferrogel 1 year high point at 33,000 for the sellers, 31,000 for the buyers, so nice little sell opportunity. If you bought at the best possible time, it's 15,000 to 35,000, yeah, 33,000, so that's over 100% increase, but close to like a 70-80% increased price. If you still bought some of these before the nerfs in December, is definitely possible right now. Pretty damn nice. Then we got Fullerites, different story, losing a little bit of those gains, heading back for 600 disc on the charts. Sellers at 650, buyers at 612, pulling the price back down here. Hypersynaptic fibers back up a little bit, clearly trading at the highest range for the year. And nano transistors back below 3000 discs, sellers 3.2, buyers 3.150, so already bouncing back. Very interesting here as well, in my opinion. You've got a very diverse set of charts, with this one showing that there are buyers ready to bounce and to take grab any of the cheaper stuff, like here nano transistors below 3k. Immediately you get a volume response pushing the price back above 3000 discs. So there's definitely a lot of trading and traders looking at the advanced moon materials at the moment as well. Phenolic composites starting to move back down and losing 12.5. Yep, 12,000. 1,224 to 1,220, so super narrow spread here yet again. I think ready to do that bounce as well. We'll see next week, of course. Pressurized oxidizers bouncing right now to 12,500 as well. Reinforced carbon fibers actually now at the same range, 12.3, just below that, but still very expensive and way more stable than what the pressurized oxidizers have done in the last couple of months. And finally, these ceramic fibers had a 1 year high point about 2 weeks ago at 600 disc. That's a little bit too much too quickly, but look where we settle, just below 400 disc, definitely the highest range of the year. Yet again, 392 to 387, very narrow spreads in almost all these items as well. So I would say that these markets, whereas the pilot sources have basically settled on the current price ranges, for advanced moon materials the market is not so sure. You've got a mixed picture. You've got Minmatar that clearly is less popular than the other factions, or at least their materials, and on the other advanced materials you get mixed pictures, some going down, some reaching 1 year high points, some very flat. So here I think the market is still, taking its time to find the consensus, and there are players that are buying, others that are selling, trying to take profits. Here competition is still ongoing, and we're not as stable in some of the other stuff, which is a little bit of surprise then, that so far the Tech 2 ship market has been pretty stable throughout all of this. So let's get to those Tech 2 ships then, coming in at 28.25. And we start, of course, as always, with a couple of Caldari ships. Here is the Basilisk, basically back below 150 million. 157 for the sellers, 134 for the buyers. So the action is clearly on both sides of the equation. Both sellers and buyers are seeing some of their sales trigger. And the bad news, again, which is what I was starting to see, is how the peak is going down, how the low prices are slowly edging up. So I think here we are seeing less and less volatility in these markets. Then we get the Cerberus that is now just hovering around the 150 to 180. That is its new range, 172 to 154. And unfortunately for me personally, these types of price swings are not really enough to be actively trading them. Then we've got the Curse that is starting to push down well below the 180. So that's definitely interesting as well, something to keep in mind. Part of the game now, in my opinion, if you want to trade in Take-Two chips, is trying to find the new bottom ranges. Where should you be trying to buy? And for the Curse, for a moment there, it looked like just below 180 was the right time to push in, or to jump in on the market. But you can clearly see that in the last 3 days we have started to lose even more. So 174 to 160 all of a sudden, very, very difficult market to actually make that decision in. If you bought below 180, you may just be stuck with a losing hand for a little bit of time here. Then we've got the Damnation that's now back up from selling just below 300 million. So that does seem to be a consensus. But again, just about 2-3 months ago, we were well below that price range. So it's not a sure thing. Definitely increased volumes though. So traders, I think, have come in to grab those relatively cheap Damnation. Sellers at 327, buyers still at 294. So you still have a chance to grab a Damnation below 300 million, which again, pretty slow, pretty steady, taking about a week from touching that point to not really go anywhere despite the volumes. Not a good sign for more volatility and for more sell opportunities. Then we've got the Deacon, slow and steady, going landing on that 20 million. Sellers at 21, buyers at 16 million. Pretty big spread, but looking at the averages, you're just not triggering buy orders here. Then we get the Eagle, a little bit of a jump, but again, not able to match the 180 we've seen 2 months ago. So that is not really the volatility we want for trading. The EOS, that was pretty nice, of course, here early May to 400 million. Came back down to 300 million. So if you wanted a cheap one, well, you can still buy one, 307 to 280. But again, the bad news, we touched that price point about a week ago and we haven't gone anywhere. So the volatility is very, very hard to find here. The Aries, same pattern, right? Managing to go 60, 60 and now barely above 55, I think. Maybe not even that, 54, yeah, probably, yeah, just not even at 55 million, and we're already starting to slowly come back down. But everything is slow, everything is very, very steady, so there's unfortunately not that much volatility. Even the Flycatcher, very slow and steady for a couple of months down, and here we settle slightly up for the week, but this is clearly not something we can trade on. The Guardian continuing to go back down as well, currently selling for 147, buyers at 136. So you're buying Guardians below 140, but I will give you guys this warning. The Curse has just shown that it's very difficult to call these bottom ranges and to buy at those cheapest prices, and you may have to wait a pretty long time before getting a nice sell opportunity. The Heretic, again, slow and steady, just staying below 50 million. That's not what we want to see. The Stealth Bombers, I've been mentioning that for a couple of months at this point. The most disappointing part here, still below 20, 19.6 to 17 million. Really narrow spread, just not moving anywhere. Ikitursa, ooh, that's nice. So Triglavian ships here selling for 550. Currently, sellers at 520, but buyers at 475. So if you have a bigger wallet, I think you can try to jump in on a buy order for an Ikitursa. Then we get the Ishtar. Look at that, just meandering around the 180. That's not tradable. This is tradable, 150 to 190, something like that. Everything else after that, unfortunately, not. Then we get the Kirin, super slow and steady, just found its range below 20, not much to say. Here is the Manticore chart, staying above 20, a little bit of pressure, but that's not what we want to see. Nemesis, very flat, super disappointing, basically here, still below 20 as well, 19.3 to below 17 million for the buyers. So you are buying relatively cheap Take 2 ships, but again, I think then patience will be what you need. Nighthawk, that was definitely pretty nice. 500 million sell opportunity, coming back down to 380, 364, 337. But the question is, of course, where do we go from here? Then we've got the Oneros bouncing off the 130. So clearly buyers are ready to spot or try to spot what the buy opportunity is. And here, below 130, below 130, below 130. So that's clearly what's happening here. 148 to 122. Buyers are not budging. So that's the bad news, right? They don't feel like they're forced up, because there are some people buying some of these Oneroses. And then you've got the tops, of course, down, 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 and probably not even gonna make 150 on this one. Then we get the Purifier. Yeah, that's not good news. Here is the Rook. Again, highs are going down, lows are going up. We're settling at a 150 to a 180 range as well for this cruiser. Then we get the Saber, one peak, and then just a slight bounce off the 40 million. So here the market said that's probably the time to be buying some, but can we get a nice sell opportunity? Again, it's going to be hard to find. Scalpel landing on 10 million, ouch. Scimitar just staying below 150. That's not really what you want to see either. Sleipnir did that late bounce back to what, 350, but I think a 3 to 350 range is not what you can really trade in, so that's not great. And then we get the Vagabond, super steady. And then we finally have the Zarmas. That's also pretty steady, but of course this is a range of 4 to 500 million. You can practically trade within that as well, but it's far more expensive, of course, to jump into, and far more risky, I think, as well, on the long term. So for Take 2 ships this week, not good news in my opinion. Everything is stabilizing this despite lower Morphite prices and still very expensive. I was going to say PI, but pretty expensive, but also pretty all over the place types of advanced bow materials. So it's very difficult to say what's happening, but if I have to look at Take 2 itself, I think volatility is again dying down. We're heading into the summer, so I think we have to get back into trying to buy at the cheapest possible price, and then hope for like Nullsec to explode again, or something really special to come in or to be announced for some of these expansions. Maybe the Alliance tournament. If you can spot the right ships, there's definitely opportunities for trade there, but that of course requires you to be in the know a little bit. So very difficult time again now. After a couple of really nice months though, right? I have to be honest, if we especially look at some of these command ships with the Winter War, and then even throughout March we had a couple of really nice months with some nice sell opportunities, but I think that those are unfortunately over. Next up we have the Tech 3 market at 37 minutes. Here we go. As always, we start with the destroyers, which last week were still pretty expensive. So here is the Confessor, 65 to 58 million. So very expensive on the 1 year chart. Volumes pretty average despite these very high prices. I'm still not exactly sure what's happening in these tactical destroyer markets. Here is the Hecate. 1 year high point above 70 million ISK, 70 for the seller, 61 for the buyer. So super expensive. Volumes, yeah, a little bit below average, but still feels like it's within the potential range for the ship. Then we've got the Jackdaw, that is back below 60 million, but only just 60 to 57 million. So buyers pretty desperate for these kinds of prices, but there's probably not that well. Actually, 100 a day, 200 here, that's pretty decent. And then this Vapel is now staying at 70 as well, 78 even for the seller, 62 for the buyer. So I have no idea why we all of a sudden are seeing these expensive prices. Could be for the gas part of it, so that's what we're gonna check as the extra product. But for now, I have to say, Tactile Destroyer market, very expensive, and despite being so expensive, pretty average volumes, so I don't have a good explanation for this jump in price, which feels like it's also too late to be tied to what was happening in Nullsec. Then we have the cruisers. Here is the Legion chart starting to come back down. We're back below 190. Unfortunately, I'd love to see a better jumping point than this one. So this starts to feel like it has the same problem as the Tech 2 ship market, just the spreads are too thin and we don't go down low enough. 191 to 186, that's not enough volatility. Next up here is the Loki. Did have another sell opportunity above 210, but you can see how slow and steady the decline from that range is. 208, 209 for the sellers, 197. That's not enough volatility. Proteus also stabilizing above 200 million. And finally the Tengu has another pronounced sell opportunity, currently 250. So 248 for the sellers, 236 for the buyers. But of course we know the story for the Tengu, that is tied to the current event that's happening. It's basically one of your best options for the combat sides here. And so you can see how the volumes due to the event have driven the price back up, and the event is lasting quite a long time due to it being the 20-year anniversary or related to 20 years of EVE Online. So as a result you get these crazy high prices. If you have invested in your Tengu, you bought it anywhere close to 180, you are looking of course at a pretty nice profit margin. Don't wait too long to sell though, because the event of course will end eventually, but those are still the trades that are possible, event related trades. And then something to keep in mind as well, of course, in my opinion, is going to be the Alliance tournament. And then for the extra products this week, we'll take a look at some gas products. 4015. Let's go. It's been a while, so let's see if I can find them again. Here are gas cloud materials. We'll start with the fullerenes first, just go through the list. This I think is tied mostly to the Tech 3 economy. Let's take a look at that. So used in this type of stuff, which is then used in, let's see if I can find, so we get this, and then we go back to industry, which is for this stuff, which is this, and then, man, that's such a complex chain. I'm not sure if I'll be able to get through that. Enhanced neural link, that feels like we're getting closer. But that feels like it's potentially one of the newer items. Oh, it's actually, yeah, look at that. Also faction stuff, but the capitals, supers and faction supers. Interesting. I thought we'd land in some Tech 3 ships, but interesting. All right, let's go through the list. Here is Fullerite C28 on the 1-year chart. Not super expensive, but clearly in the last month or so, we have gone up substantially in price. C32 is staying pretty inexpensive below 20k, but again, C320, while starting point was pretty inexpensive, we're back just above average on this one. 38,000 for the sellers. C50 still below average. C540 going up of the last month, but from a 1-year low point. Fullerite C60 a little bit below average, still below average, still below average, and C84 also below average. So the fullerenes seem to be pretty affordable at the moment, with a couple of them though showing us warning signs, as in the last month or so they have become more expensive towards an average to even slightly above average prices. But I think what we're most interested in are actually the booster gas clouds with the Cito and Amico Saracens. So let's get started. Here is Amber Cito. Actually inexpensive, really not what I expected here, guys. Amber Cito is basically below 50k at the lowest price point of the year, pretty much. Amber Miko around average, 75, so that's probably going to be 85, something like that. Yeah, 90,000 for the sellers, 81 for the buyers. Azure Cito rather inexpensive, sellers just above 30k, buyers at 27, so that's 30,000 average. Azure Miko did have a bit of a climb, but it's nothing all that uncommon for its price. And again, Celadon cytoceracin, pretty inexpensive. Celadon Miko, that's a 1-year high point. So here is our first exception, selling for 130k to 120k, rather expensive. Then we get Golden Cyto, yeah, average, just below average. And Golden Miko, 100,000 disc, normal price for the last 6 months, but clearly also, I think, driven with pretty strong demand from industry. Lime Cyto, still very flat for the last couple of months, almost all of them, 75k, a little bit above average, but nothing too crazy. And then we get Lime Miko, another 1-year high point on this one. 4 or 5 months ago, 75,000 disc, now 110,000 disc. It's a lot, of course, as it being a pretty base material, so it's a pretty significant increase in price, but it doesn't feel like it's all too crazy. Malachite Cyto actually pretty much average for the year, and Malachite Miko slightly below average even. Vermilion Cyto, low price. Vermilion Miko, pretty much average. Viridian Cyto, very low price, probably close to 1-year low point. And Viridian Miko, just in the last month here, climbing from a below average price to the highest range of the year, but 140k to 136k. So a little bit of a mixed picture, but I thought we would see a lot more very pronounced 1-year high points or something like that. That would explain why the tactical destroyers are so high in price all of a sudden, but we're really not seeing that. A lot of them are quite average and affordable. A couple of them at the highest ranges, of course, but that's actually to be expected with just regular supply and demand. So nothing that stands out that would say that there's a real problem with the gas cloud materials this week. Not what I expected, but that seems to be the case. So if you guys have any explanations for those tactical destroyers climbing up in price that much all of a sudden, let me know in the comments, but I can't find it in the gas cloud materials this week. And there we go, that's it for this EVE Talk, guys. Thank you very much for watching, and as always, I'll see you next time.